United Kingdom to limit banks' exposure to cryptocurrencies from 2026. The United Kingdom is preparing to tighten the regulatory noose around cryptocurrencies. From 2026, British banks could face strict limits on their exposure to digital assets, such as Bitcoin and other volatile cryptocurrencies. The proposal comes directly from the Bank of England and marks a clear move, protecting the traditional financial system in the face of crypto market volatility. But what exactly is at stake? Why now? And how could this impact the global scenario? Stay until the end to understand the British plan and the new chapter in the tension between innovation and financial stability. The Bank of England has announced that it intends to propose new prudential rules for banks, with implementation scheduled for 2026. The focus is to severely limit financial institutions' exposure to cryptoassets, especially the most volatile ones. David Bailey, the BOE's Director of Prudential Policy, explained that starting with tougher measures makes sense, as regulators are still gathering data on systemic risks. The future rules will be aligned with the Basel Committee on Banking Supervision, which recommends that banks limit their exposure to cryptocurrencies to just 1% of their total capital. This move comes as a direct response to the fragility exposed in 2023, when we saw the collapses of institutions such as Silicon Valley Bank and Silvergate Bank, both closely linked to the crypto sector. The message is clear: the higher the risk, the less room for improvisation. Expected impacts. If approved, these guidelines could limit the ability of British banks to interact with high-risk cryptoassets, even if they are sought after by clients or investment funds. The aim is to protect the financial system against sudden shocks and abrupt drops in value, events that are quite common in the crypto space. Regulation, however, does not mean a total blockade. Stablecoins and more backed digital assets may be treated differently as the technology matures and more data is analyzed. What's next? In addition to the Bank of England, the Financial Conduct Authority, FCA, is preparing a new regulatory regime for the cryptocurrency market in the country. Both frameworks, the Prudential and Conduct frameworks, are expected to be launched simultaneously, providing a comprehensive regulatory framework. This would position the UK among the countries with the most robust regulation of crypto assets, balancing openness to innovation and risk containment. Global overview. With this proposal, the UK joins other developed economies that are redefining the cryptocurrency space within the traditional banking system. The message to banks is: innovation is welcome, but risk will be carefully monitored and limited. As stablecoins and digital assets gain popularity, clear rules are essential to ensure security, transparency, and predictability. If you've stuck around this far, you've already realized that we're not facing a simple regulation, but a paradigm shift in the relationship between banks and crypto assets. The United Kingdom is sending a signal to the world: financial stability is more important than technological euphoria. The challenge now will be to find the balance between regulatory security and real innovation. Keep following the channel to understand firsthand each new step in the global financial scenario.